A very good evening to you traders. It's Mark here from Daytrading Room. Time is 5:30 in the afternoon, London time, Sunday afternoon, 12th of January. Happy New Year to you. I want to discuss a couple of trades that I think are very useful to learn from. These are the two trades that I've been reviewing particularly, along with others from the past week. So I'm going to include these in the video. Now, they happen to be on the DAX. These are actually the only two trades I've taken on the DAX the past week, but because of their similarities, but they were traded so differently, they're great examples to see price action and tape and price positions and bits and pieces like that. Now, I don't specifically trade the DAX as such, but under certain conditions, I've got all the indices up on my screens, and I will look across to obviously NQ, ES, DAX, all the commodities, or what have you. WAIM is my primary trading vehicle, but I will trade others if the setup looks better and it matches my bias that I've already got with the market. So if I'm looking for a short position, a short setup, and I happen to see something that has a better price position and a better tape action and potentially more profit with less risk, then I'll jump to that and watch that for a bit, get in tune with the market depth and time and sales and tape action and trade off that. So a couple of trades now, but I want to show these two side by side, but they're one was from Friday, one was from Thursday. Very similar pre-trade price action, but very different responses and very different trade outcomes, as you'll see. So the first one I want to talk about is on Thursday. Now let's just get things into perspective. We've got a 5-minute chart on the DAX because it's very important to see or to show what happened before the trade, because that makes up a lot of, and this is why I've used these two examples, because it makes a lot of difference, should I say, as the outcome of the trade. So we opened up at no gap, we pushed lower, we broke through the prior day's low, we then had a big drive up, we took out the prior day's high, which is dotted green here, dotted red is the prior day's low, solid red is the gap. We did a lot of work up there for quite a long time, and then we unwound, we pushed back to the VWAP, consolidated around the VWAP for a while, and then we got this surprise move lower. Now this is where it starts getting interesting. We have the surprise move lower, takes the market negative, there's the prior day's close, takes the market under the prior day's low, takes the market under today's low, tries to hold and breaks, and then this is where we start getting interesting. Now this is why this has caught my eye as opposed to trading the Dow or the ES or something like that. The close on this is 430 for the cash, so we're coming right into the closing period about here. So there's the background, and let's switch to a 1 minute and look at the intricate detail of the price action. Okay, so we're on a 1 minute here. Let me scroll back to that day. There we are. So we can see here on a 1 minute chart, pushing lower, pushing lower. Reminder again that the close here is 430. The cash closes at 430, and what am I going to do? What am I looking for? What did I do? How did I take the trade? Well, we push lower and we're consolidating. Now if you look from here to here, we've got about 51 to 68, so about a 17-point pullback was the max. Drove lower, again we've got a low here of about 10, and we've moved up to a high of 26, 27, so very, very similar pullback distance from a good aggressive drive. And put it into perspective, that's a 100-point drive lower. So 100-point drive lower, bulls are getting no respite on here. Everybody's trapped pretty much from here backwards is trapped. So what am I looking for? Well, as we're coming into the closing period and we just cannot break, we start to form a bit of resistance, short-term resistance around that level after driving lower. Now I like that sort of setup. To me it says the sellers are still in control here. No buyer has stepped up to the plate. No one has decided that the fact that we're down 100 points from where we were half an hour ago is meaningless to them. They're not considering it as value. They're not stepping in aggressively enough to drive it back up. Sellers are still hitting it. Maybe there's a sense of urgency because the closing bell's coming up. So this fits nicely. That combined with breaking the prior day's low, breaking the current day's low, having already trapped some people in who bought the breakout. So I like the fact for a scalp short opportunity. So as we popped up to this resistance level here, I took the short, we rolled over. I'm scaling out the position as we come in. I had 2/5 of the position left as we came into this low here. This low started to look like it was going to hold. So 1/5 came off, so bearing in mind I've got 2/5 left, so let's call it the whole position. So half of the final position came off. as we hit there, just based on seeing it hold, coming rushing down, and with the DAX especially, I'd expect it to crack, and I'm looking to buy into those stops. We didn't get it, but nevertheless it's a nice trade. So scaling off there, had a fifth of the position left, we popped back up and I held it, thinking maybe we'll get a roll into the close. Didn't get it, and it'll stop to break even on the last. No problem at all. Still a very nice trade. Not fully what I expected, but being able to lean on that resistance, having had prior price action the whole day, really setting the scene for that being a high probability setup, made it a nice little trade. Now let's compare that with the trade I took the day after, and bear in mind all the attributes of that trade and compared to this trade that we're going to show you. Non-farm payrolls came out 130. Whole trade, every trader in the world is watching that, and normally watching the gold, the YM, the ES, the gold gold, YM, ES, the dollar, some of the popular crosses, and I'll have the other indices up as well, again looking for some sort of response that is better or slightly better on one of the indices to the other, but based on the theme of the trade that I'm taking. So let's get rid of that line there, and we can see, let's just look at the position. It's very dissimilar, very different position of price than the prior day before the trade. This time the non-farm payrolls came out here and we drove lower. Now all we'd done is push back up into where we were in the afternoon session the prior day. We hadn't taken out the prior day's high, we're still within the yesterday's range, we hadn't done any work down here. No one's really trapped in this at all. It's a complete different type of setup, and we've got the non-farm payrolls and we drove lower. So let's put on a 1 minute chart and we'll have a little bit of a closer look at the action. Okay, so here we are. Right, so we drove lower after non-farm payrolls. Not a big response from gold, not a big response from a lot of things really, considering we often have a lot. We did get a bit of a spike, but nowhere near as much as we have had before, even though the number was a lot lower. But anyway, regardless of what the number was, it doesn't matter. All you're looking for is price action setups that are based on good, high probability, low risk if possible trades. So we drive lower, and this was quite an aggressive move. You know, it was not much. There weren't many pullbacks on it. The volume was pretty good. I was watching actually on the Dow tape, and it was just flushing lower, pushing lower, very aggressive. Now consider this. These two candles here, three candles here, when you compare them to the DAX. Now the DAX, compare them to the day before. The day before we had to drive lower, and it was just holding at lows. Whereas this, we had a completely different setup. Pushed lower and we drove straight back up. Within 4 minutes we were almost back up to the VWAP. Now that's telling you something. Okay, from that point there, the first pause after then is the crucial point where the scale is going to tip in one direction or the other, and the market's going to show its hand. Now a pullback is perfectly acceptable. Sometimes you get them a little bit further than you'd like. Sometimes you get them very shallow flags like that. Sometimes you get just pauses. They're never the same. You've got to assess them on their own merits. But when you've got a deeper pullback, you've got to say, okay, now have the sellers completely backed off here? Because the volume's okay. We were moving down in volume compared to that flush, which generally is to be expected, but we weren't dying off completely, and we've pushed quite back up quite high. So at this point here, I see this red candle. I want to know what's going to happen. Really, the next move, if we push up, I'm going to look for a long position on that. Now completely different from yesterday, but because of the price action, because of the response to the drive, because of the position of the price, because of the fact that no one was caught, to me it looked like it was a little bit of a stop fishing exercise for non-farm payrolls, and now we're potentially going to drive out and take out that high. So as we saw this green candle come in, I took the buy. I took a little bit of heat on that, and we came back over and tested this low, but we didn't break the low, didn't get close to pinging my stop. And then we pushed up higher, and I scaled out the position as we pushed into highs here. There was no real further push, so it wasn't a really sweet trade, which would have been nice to see this just explode upwards, then trap everyone there, and then you're in a powerful position because you've already got your long on. It doesn't matter if it doesn't break out, whatever happens, if it comes here or if it consolidates and goes higher, you've made a good trade on it. So it's nice to be in those early on. Didn't happen, but it was a nice scalp nevertheless. But interesting to compare those side by side. Price position, prior price movement, response to the drive lower, all those things were completely different. And that's why, even though this was similar in terms of the drive lower, the actual drive from high to low, almost 100 points, not quite as much, but everything else was completely different, which is why I took that trade on the other side of the coin. Okay, so there's a couple of trades reviewed there, very different but yet similar at the same time, based on reading the tape, based on the order flow, based on looking at the orders coming into the book and how the market responds to those orders based on the price position. So taking all those attributes and variables and combining them with the tape read to produce that entry and then adjust the exit to suit again while you're watching the tape. No hero trades there, guys. It wasn't a high to low swing. It wasn't really catching turns. It was just a nice higher probability, you can always call it a scalp trade, based on the whole overall range. It's not a lot, but when you're bringing all the attributes together, you're just adding the layers of edge and generating a higher probability for the trade. So good trading. Manage the risk next week. Have a great week next week, and we're back with another video at the weekend.